Hey, good morning. Hello. How are ya? How's your mum? Happy Monday, everybody. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis of dollar pairs, yen pairs, gold, oil, and Bitcoin, and whatever you want. That being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. Hey, my name is Wayne. I've been trading currencies a long time. Forex and futures are my passion. What else? I own some stock. I own some real estate. But that's pretty much it. And before all this, I worked somewhere between a venture capitalist and worked at NASA. But never traded anything. So Forex was my first love, trading finance as a career. It's my first love, and I still think it's the best. So I've learned a few things along the way because I'm approaching 20 years in this gig, which is a lot different from my years in the Silicon Valley or my years in nonprofit. So, wow, what an interesting ride it's been. I've learned a few things. I've made a lot of mistakes. And so if you ask good questions, you can learn from both the good and the bad so that you can find your success maybe faster than you found mine, or without less pain or suffering, whatever. Just let me know how I can help. That's why I'm here. So technical analysis, fundamental analysis. I have a little bit of education from Harvard, MIT, and Oxford, all focused on the finance industry. Cool, man. So ask questions, get involved, and I will do my best to help. There are something like 6,000 videos associated with my work and trading techniques on YouTube, on this channel, on the Forex.Today channel, on the FX Bootcamp YouTube channel, on the Trader's Way YouTube channel, on the FX Street YouTube channel. So there are plenty of resources, and all those resources are free. If you prefer to read, hey man, I wrote a book. The link is in the description below. If you like training videos so you can watch and watch and watch and watch and watch and watch, 65 hours of them are available at FX Bootcamp for $88. Yeah, seems fair, right? Cool. And of course, there's a link in the description below to tradersway.com. We all need foreign exchange brokers to enter our trades into the interbanking system through their liquidity partners. Traders Way earn my loyalty and respect through their actions. My interpretation of that, again, is that they have ethics behind their business. So if you open up a demo account, maybe they'll earn your loyalty and respect as well. Remember, you're trying to create a successful small business. And back in the venture capital days when I was doing that kind of stuff, it mattered what service providers your tiny startup had engaged. So in my startups or in the startups I worked with, many of them had big, powerful law firms and big accounting firms, and yet they were just like 5-person teams building something out of nothing. And you're like, but it's so tiny and so small. Why did they need these service providers? Well, it's a big part of the business. And if you get the good service providers, it reduces risk and brings credibility and all that kind of stuff. It's always been super important. So, your broker's important, and you should try Trader's Way. The link is in the description below, but if you don't want to click the link, just type it in, tradersway.com. Now I got to switch to that. There we go. I also need to see how you guys responded to the poll. Did you answer the poll? Let's see. So I asked you, what are you trading today? Euro, pound, Aussie, or CAD? Okay. I'll give you a couple of minutes or a couple of seconds longer. If you haven't, please complete the form. Let's see what your mind is on. You're going to learn about, well, what is the rest of the market trading, or at least on the retail side. 3, 2, 1, boom. Okay, we have statistically relevant information here. Most of you are focused on euro. Have I told you you're my euro? Euro. I like to trade euro. Euro? With tzatziki sauce? All right, cool. Let's start with the commodities. You know what? No. Let's not. We'll go there in a second. Hang on. Let's start with the indices and just see what's what. Okay, euro is coming down right now, which is great. I'm fundamentally bearish on euro. I'm also fundamentally bearish on pound. It's got a little bit of up right now. Maybe that high inflation is going to lead to higher interest rates, and we got to kind of price that in on the short run. You know, again, short run versus long run, right? So we'll see, like this goes back a long time. So pound had some strength and then all of a sudden is sideways. So a longer point of view, I guess what we're asking, is pound going to rise up above this resistance and maybe even go higher than this? Or is pound topped out, and maybe work its way back down to the bottom of the range? Well, that would be the decision that you're making. And mostly that would be fundamental. When you're looking that far out, that would be fundamental. Okay. So if you put it in that kind of context, what do you want to do here? Do you think pound is going to work its way up this week? Or is it going to be more like this? And if you can't make a decision fundamentally, at least you can, make your observations using technical analysis. Okay, hang on. There we go. I'm going to move some things around. Hang on. There we go. Let me get that done. All right. Okay. Simon says, hey, with news? Sure. Okay. Things often need a catalyst. That's great. So what else is going on in the world? Canadian dollar has regained some strength. That makes me happy. Aussie and Kiwi, I'm not so sure about. US dollar strength, that is also. So the tone I've set, like in swing trading and day trading, is I want to be long this. I want to be short this. I want to be short this. I like this being long. And I'm sort of like this here, like, right? I'm like not terribly bearish, but not quite there. Okay. Close, you know what I mean? Okay, so I'm going to carry that out. And then I do want yen weakness, but as I've mentioned, don't trust it. So within the day trading group, I've outlined a specific sort of unique strategy for the yen, and it's not even based on fundamentals per se. It's almost based on the flip of a coin. But whatever, it's still a strategy. So let's carry that out. So what we're asking right now is, will we have a risk on or risk off week? And that's for you to decide. Okay. My oh my, WTI. Failure to breach 90. Back down to 87 and change. It's going to get interesting. Okay. Could get very interesting. Drop into a small time frame if you want. Look at that open. Holy smokes, eh? Holy smokes, eh? So, let's take a look. Well, by the way, I don't know if you're scalping this or what, but obviously we're on support now. And then there's, this resistance sort of up into here for later today. It's all price action now, baby. Okay. So, trade it if you want it. Where I'd like to see this go is like, I understand my fundamental direction here. So I'm much more interested in the price action on how this develops. This is a special week. Okay, members of FX Bootcamp have been prepped and primed for this for a very long time. This is not like a week ago. This is different. And you're like, well, what do you mean by that? Well, there's normal seasonality, and then the second year of an 8-year political cycle seasonality. So we have some unique forces going on besides the uniqueness of the economy slowing down and the Fed helping it slow down. That's very unusual. Usually when the economy slows down, the Fed helps to speed it back up. So we got some uniqueness here going on. And so a big move right out of the gate Monday morning in oil, not that surprising. Okay. Maybe it's coincidence. Okay. But in January, I did a 2022 outlook for the year. And I said this week, and there's the beginning of the week, I said this week would be an important week. So we'll see. I don't know what's going to happen, but that's a big open on a day that I said watch for the volume and volatility to start to increase dramatically. Cool. Back in Jan. All right. So anyways. All right. Going back into here. Now we've gone from, July now, 20th to the week of August 20th. And here he is. And once again, we had a less aggressive Fed would drive price up. And I said, of course, it's nonsense, but believe what you want to believe. Then we get here, and I have it reversing and coming down significantly. And it did reverse it off my exact price. And it has now come down fairly significantly. Cool. You're welcome. Look at that. All right, so now we have a technical downtrend and a reversion back to the mean, and we're basically at the mean now. And if you're going to trade the mean, you know, we're on our way down to 1600. I'm not again, not a prediction. That's just what this channel suggests. If you took this channel forward, and there's a way to do it. Okay. Now, this one goes forever. Okay. But you could just have a 7-day prediction instead of going out forever. And that would be helpful. But you could just say, well, if this continues in let's say in 7 days, you know, well, I guess it'll probably take 2 weeks to head down to here, right? And then, right, a month down, a month up, a month down, that kind of stuff. So that's what the channel would say. But then you would try to use fundamentals. And what I think the fundamentals tell me is more like this. Where a large part of this will actually just be sort of sideways, but bearishly sideways. Okay? Breach lower, retracement, a little bit lower, retracement. And on average, you know, your average would be sort of like somewhere in here, right? No. No, Theta, that's the Fed raising interest rates. Okay? It's the Fed raising interest rates. For example, why do people like to buy gold? What's the classic reason for owning gold? But the Fed should end this cycle of rate hikes. We said, I don't know anything about what you're talking about. What do you mean the Fed should end the cycle? According to what? Okay. Hedge of inflation. But the Fed's raising interest rates, driving inflation down. Okay? I keep making this point. If you wanted to hedge inflation, you should have done it way back in 2018 or 2019. Okay? But once you get inflation, there's nothing to hedge. You missed the boat, bro. Okay? That's the thing. You know, when people are buying gold and inflation in the UK is already 10%, and now you're buying gold, you missed the point about owning gold. It's an inflation hedge when it's an inflation hedge when it's going up. Okay? So right now the Federal Reserve, for example, is lowering growth. It's going to make people lose their jobs, so on and so forth. So they're slowing the economy down, which is deflationary. Okay. Now, Theta says, but the Fed should end this cycle of rate hikes. I don't know where you get that. I have the opposite worry, Theta. So, for example, right now, if you look at the facts, what's being priced in is interest rates 1 year from now being at 3.75%. And the Fed models say that we're going to be, you know, we're going to go from 9% inflation to 4% inflation, and then very quickly 2.5% inflation. That's what the Fed models say. I think they're wrong. Oh, so presumptuous. Yes, I know. But I think the Fed raising interest rates will slow the U.S. economy, but will not do a dang thing for the supply chain, will not fix China, for example. So I think what will happen is we'll get to 3.75% and we'll still have high inflation. So what will happen is, by tracking facts, by the way, I think over time, 1 year from now, we'll be at 3.75 talking about 4.5. By the way, when I first started trading Forex, I think we were at like 5.25%, and that was normal. That wasn't high. On the 10-year T-note yield, right? Not interest rate. But maybe it was interest rates. I don't know, so long ago, right? But it wasn't a big deal. Interest rates in New Zealand were 8.75. In New Zealand, 8.75. Not South Africa, not Turkey, New Zealand. Okay? So like when I say like 2020, let's say July 2023, we're at 3.75. July 2024, we're at 4.5 or maybe even 5.5. Let's say all the way to 5. That's none of that is being priced in right now. But we can make some guesses here, some assumptions. If we get to 2023 and inflation is 7%, which is better where we are now, the Fed will probably think like a Fed. They need to go farther. They're not thinking like business people that say, no. This is a supply chain issue. No. They're going to think about, and by the way, this is 2024, sorry. The Fed's going to think about a Fed, like a Fed, right? Like they're going to think it's a central banking problem. So they'll continue raising interest rates, maybe. This is just a model. This is a way of trying to describe what might happen in the future. So they'll say, well, we need to keep going. We haven't had the desired impact. And anyway, so we might go to 5%. What does that mean? They're going to make money cost more by raising interest rates, which could bring this down because it's deflationary. What is inflationary? You want to know what inflationary is? Okay. Here's gold. No, I have to go further out. Let's back this out a little bit. Oh, yeah, it's that one. There we go. What is inflationary? The central bank and the central government adding to money supply. Okay? The Fed does it through credit. Fed. Okay? Okay, the White House does it through cash. Okay? They created inflation. So at least one of those entities are removing what they added. There you go. Lesso, they're already doing that. Lesso says, hey, Wayne, can they, meaning the Fed, sell bonds if inflation doesn't go down? They're already doing that. That's what balance sheet reduction is. They can't sell something they don't already own. Okay. But the thing is, I will argue that the Fed added credit, but did not create inflation. I believe this is the government, the central government, not the central bank. Okay? And so what's the government going to do? Okay? The White House, Congress, and the Senate. Okay? White House, let's put the, right? Congress, Senate. Okay? Added $5 trillion in cash. Literally put it in people's bank accounts. Now, that's not the same as credit. That's not the same as allowing banks to lend money to businesses and capital expenditures like buying a house, building a factory. You see the major difference? Eventually, if Amazon is able to borrow money from a bank cheaply, they'll build an Amazon warehouse somewhere and the construction workers get jobs. I know someone that owns a fence company and did like $100 million contract just for fences that go around Amazon warehouses. Huh? Can you imagine that? So like that money eventually trickles down, like the construction people get jobs, the landowner sells their land for a profit, and then once it's constructed, then all the Amazon warehouse workers and the truck drivers and the delivery guys, they all get jobs, and then the Amazon pays local taxes, and you know the forklift driver eventually gets money from having that job that originated from cheap credit given to a bank that came from the Fed. And eventually the forklift driver has a decent job, and then they go to Walmart and buy a TV with it. Okay? But you see how much productivity is actually involved with all of that? Taking land that is perhaps unproductive and making it more productive. Maybe, because here in Georgia, there's a lot of land that people don't even farm. It's just an empty field doing nothing for generations. Maybe you shoot white-tailed deer on this land, and then one day, boom, it's got an Amazon warehouse and there's 100 semi-trucks outside and 300 workers inside. And now it's highly productive. But what if that came from cheap money from the Fed? Highly productive return on investment. $5 trillion straight into the bank accounts has no productivity whatsoever. Here's some money. Oh, I guess I'll go buy a TV. You see all the productivity that didn't happen? That's where the inflation comes from. Because productivity is deflationary. Because they built an Amazon warehouse near you, you get 2-day shipping for free when you buy on Amazon. And the prices on Amazon are generally low. And now you don't have to get in your car and drive to a Walmart. It just shows up at your front door. And you're like, oh, nice. Everything's easier. Standard of living goes up. I mean, I don't know about you, but if I order from another site and they're like, it's going to, we ship within 2 business days. And, you're like, 2 business days? How come I don't have it in 2 days? Why does it take you 2 days just to put the box in the mail? And then why does it take a week after that? A week? I have to wait 10 days to get my purchase? Like, you can see standard of living went up when you just get free shipping and it's there in 2 days, right? Meanwhile, prices should be coming down. Productivity. That's all productivity. When you're productive, okay? When you're productive, prices are low. Okay? Like if you go to a poor country, very often things like labor is cheap, but cars are expensive. Vacuum cleaners are expensive. Microwave ovens are expensive. TVs are expensive. In America, in a rich country, all that crap is cheap. Oh my God, you want a microwave? Go to Walmart. You can get one for $50. Okay? Probably even less, probably $39 you probably get. But wages are high, right? So anyways, productivity means you have a job and it pays a lot, and then you can go to Walmart and you can buy anything you want. Everything's cheap. So giving that money out, that $5 trillion in cash, that was a bad move. Economically, not cool. Okay. I would say the best thing to have done during COVID was extend unemployment benefits. Because if you had a job, but now you lost your job because of COVID, you can't go into the office because everyone's afraid of getting a disease and dying. Okay, I get it. That's real. And they shut your office down, lay you off. Okay, that's cool. Whatever. Understandable. It's a crazy moment in time. Cool. Unemployment benefits. And 6 months goes by, and maybe your unemployment benefits normally run out, but if we still have COVID challenges and it's not an employer problem, it's a pandemic problem, okay, the government should extend that. If you're on welfare anyways, it doesn't matter. Nothing's changed. You're still on welfare. COVID welfare, non-COVID welfare. But 90% of people maintained their jobs. They had careers, not jobs. So the waitress at Applebee's lost her job because nobody was going out to restaurants, and so they closed all the restaurants down. But I don't know anyone that got laid off because of COVID. They all had careers, so they just build a home office, not a big deal, work from home. Okay? So they didn't. 90% of Americans did not lose their jobs, which means they didn't need any cash. None. And if your employer forced you to build a home office, they should pay, not the federal government. So anyways, there is a gross misuse of capital. And that's where the inflation comes from, because there is no productivity. Okay? Unless you took your COVID money and built a home office, but maybe your employer should have done that, not the government. So now the way for the government to remove that money is the only real way is to raise taxes. Milton Friedman. Okay. That's why productivity is so important. Okay? I want you to think about it this way. Productivity is a form of investment. Investment requires return. If you don't have a return on investment, on ROI, it was never an investment. How about the stock market? Why did it go up from the pandemic? There was $10 trillion. You got to follow along. The Fed, where's my mouse? It went away. My mouse went away. Whoa. Okay. Fed added $5 trillion in credit. Okay. The government added $5 trillion in cash, for a total of $10 trillion just in the United States of America. Everything went up. Why did the stock market go up? Everybody had cash. Why did we get meme stocks? Because ridiculous people had ridiculous free money and did ridiculous things with it, like gamble it all on meme stocks. Why? They didn't need the cash. It's not like people took the cash the government gave them and used it to buy food, 90% of the people that got the cash already had money. They already had a job. They didn't need it. So they're like, oh, well, let's just throw it in a bunch of meme stocks and get rich quick. That's what some people do, let's just say. Okay? Okay? So, why was it not inflationary? What I'm trying to say is this was inflationary. And this was not inflationary. The top one was productive. The bottom one was unproductive. An example of it is 2008. The federal government was impotent and did absolutely nothing. But the Fed came in, I don't know the number, I think it was only 1 trillion. Shows you how over we responded. I mean, we went from 1 trillion to 10 trillion. What? But anyways, so let's say the Fed came in with 1 trillion worth of credit and we never had inflation. I would not be shocked at all if only the Fed responded and we did 5 trillion in credit. Maybe we get just a tiny bit of inflation. Maybe we're at 3 or something instead of 1.5. But back down in 8, we responded with $1 trillion Fed response by making credit available. We called that quantitative easing. Okay? And guess what? No inflation. Okay? We have not had inflation since what? 1982? Maybe I'll put 83 because of the crash. Okay? Think of it. We have not had inflation since 1983. Think about that. All the boom and bust cycles we've had, all the boom cycles. The dot-com days, no, not really. So on and so forth, right? And now we have essentially double-digit inflation. The only thing that's changed that was different and was not tried since 1983 was the $5 trillion from the government. That was the new experiment, and we got it instantly. Snap, like a crack of a whip. Okay? Once again, and you'll find this a theme in governments, good intentions with unexpected consequences. Frank says many brokers restricted retail traders from taking buys on oil when it was less than $5. That's not your broker. Those are exchanges. Those are clearinghouses. There's a mechanism behind what people do. Okay. JKM says salaries are hardly going up. They're actually going up incredibly fast. But you got to look at what that means. So you're like, man, they're only up 2%, 3%, 4%, 5%, whatever the number you're looking at. That's radical. Yeah. The other issue right now, and everything has an ebb and flow. So let's say all the new workers that were not working before, but American companies were so desperate to get just bodies. And this is where I think, and you're going to hate me for this maybe, but I think this is where socialism breaks down. Hire everybody. Well, in this case, capitalism, there was such a desperate need for workers. They're like, dude, just get bodies. I don't care who you hire. Just get a body, put them in that seat, pay them money. You'll probably have to pay them a lot of money. So you get these new workers and you pay them a lot of money, and then you look at the productivity. Okay? So I'll call it that. GDP per worker fell. So you have to pay these guys more. You probably shouldn't even hired them. But you not only did you hire them, you paid them a lot. And then you get this situation where when you're doing stuff like this is what kills the economy. You're overpaying and getting a lower return. It's unprofitable. Okay? So these expensive workers are producing less than the other workers. And what happens is eventually the productivity of the company falls, the expense of the company goes up, the profit margins fall. And what happens? They're like, yeah, this was a bad idea. And they get rid of these workers. And unemployment goes back up. It's interesting, huh? So wages have gone up quite a bit. Again, you might say, well, 3%, 3% a year isn't a lot, but in 20 years, that's like double. Okay. So, yeah. So anyways. Okay, Brent down. What time is it? Yeah, the stock market's open. Let's take a look. Okay. Somehow it got stuck on this. So I've had to do this a couple of times now. I wonder how. Okay. All right. So what's happening today? Down. Cool. That's what I expected to happen in January. So breaking below this is important for trend traders. Okay? If we have a big bearish day, it's going to give you an opportunity to then look for a new future trend of selling lower highs. Okay? Which means last week was the top. We don't know yet, so, right? I ain't say, right? Like Eazy-E said, right? Don't quote me. I ain't saying. Anyways, in January, I said this period right here. I mean, this period right here would be pivotal. Now, if the algo says 4, yeah, I would say 36 or lower. Oh, snap. Yeah. I think, yeah, even though we're at 42, I think it's possible If things go bad, we're looking at 3,000, not 4,000. The Exile says, I suppose it depends on what you restrict your definition of inflation is. I would say that the rise in the stock markets and property markets. Yeah. Okay, but that's just a consequence of quantitative easing. That was easy money. Oh my God. Those were such amazing, awesome years. What does quantitative easing do? What is it designed to do? Remember, it's credit. Not money. Poor people have money. Poor people don't have anything. Rich people have money. Wealthy people have credit. They have assets. They have businesses. Okay? So when quantitative easing goes out, it pushes up asset prices. Real estate and stocks. So it's not directly inflationary. Asset prices go up. Okay? Sweet. And you sell the hell out of the US dollar. So you might say, well, that's inflationary. Okay, cool. But see, that's the thing. If the US dollar, I meant this to be USD, if the US dollar is falling in value and all you have is money, you have to spend it because the value of money is falling. But you don't have enough money to buy stocks, and you don't have enough money to buy real estate because you don't have any credit. If you don't have credit, you're eternally poor because all you got is money, and then money is worthless, so you need to spend it. And usually you can't spend it on stuff that make you more money, so you spend it on stuff that depreciates to zero, and you're stuck in poverty for generations. And the rich get rich. We know these things, right? We know these things. They're cliches for a reason. The rich get rich, while the poor get poor. Well, the rich just don't have any money. They have credit. Credit is a track record of success. Okay? Credit is a track record of success. You want to borrow money to buy a house so you can stop renting? Okay, go to a bank. Oh, but I have poor credit. Well, no one's going to lend you money. It's hard to get out of that cycle. So you will have to work hard for years to improve your credit. Yeah, well, that's a track record of success. Oh my God, you worked for 5 years to repair your credit? And you're like, yeah, I was a bitch, but I did it. Well, good for you. You're a winner. We'll loan you some money. Okay? So it's all hard work, but it's all a track record of success. Credit is a track record of success. Like your trading track record, you show it to somebody and they give you money and now you can trade with it. Okay, you get to keep 20%, they keep 80%. Oh my God, it's just like a mortgage. Right? Yeah. So you have to get rid of your money and you got to get credit so you can have assets that appreciate. And then, of course, what happens when the economy tanks? Typically, the government helps you out, or the central bank at least. Now, this time the government decided, well, we won't let the Fed have all the credit. Okay? And now we got problems. Okay? Credit. The Fed is about credit. Credit doesn't create inflation. But it'll make you rich. Okay? Like, think about it. Elon Musk is the richest person in the world. Cool. He wants to buy Twitter, or at least he did. I don't know. I haven't followed up on that in a long time. But everyone will tell you he's worth, what, $120 billion? So why is he like pissing around with banks and hedge funds and leveraged buyout firms and like to borrow the money? He doesn't have any money. He's wealthy. He's worth 150 billion. He doesn't have 150 billion in cash. If he did, he'd be rich. But he wouldn't be wealthy. Okay? So anyways, we'll get off that. You got to own assets, guys. Okay? You got to own assets. So anyways, we're in a situation here where this is very, very relevant. What we're facing today is very, very relevant. Very relevant. Very, very relevant. Today is not like last week. Today is not just another day. Today is a day I pointed out in the second week of January as being important. Now, with that being said, I'm the genie in the bottle. You got to rub me the right way. Come, set me free. No. Wait, that's Christina Aguilera. You have this crystal ball. I don't know if it's right or not, but that's what I said back in January, and I'm sticking to it. Now, you've been told to step up, sit up, take notice, pay attention, get involved. Okay? That's that. 3 chords in the truth. The rest is up to you. Okay? So my WTI, Bitcoin, look at that. Just lovely, tell your mom, huh? Look at that. Right on schedule. Okay. So my stock portfolio is partially hedged. I'll probably buy some more hedge today. But I bought everything I want to own, and I believe they will still be in business 5 and 10 years from now. So I'm okay now. Now I just got a hedge valuation. Bitcoin is one of the things I use for direction. And it's trending, baby. For those that are in my super secret, fundamental, quantitative, I don't know what to call it, signal service, wink, wink, nudge, nudge. All of this makes sense. So imagine like all this time, okay, this was going up. Oops, let's do it in a different color. But nothing fundamentally had changed. Or even technically, for that matter. Look at the resistance. Okay. But then you have to take this now, put it into context. Well, what does this mean? If Bitcoin goes down, then what does that do for euro dollar? What does that do for the S&P 500? Oh, well, that's easy. You should know that. Okay. Could take a look around the world here. Here's my euro dollar trade. We just broke parity, and I have 340 pips profit on that one. Okay. And how long ago did we talk about it? Well, right here. But the thing is, we talked about it here, and we talked about it all the way here. And then the other thing that we had is up, wait. Okay. And here we are, Monday of the week I called out back in January, and we're breaching parity on the exact morning. Okay. On the exact morning. Kind of interesting. Now, don't get me wrong. It could still do this. Look. Okay. I'm not saying free and clear. Okay. But this is when the market's going to wake up. Okay. Now, Hunt for Trader says, what an entry. That is easy. Okay, this was created in the swing trading group. We had many trades like this. This is a standard. See, this is a weekly role reversal on top of a monthly entry. That's just one of the swing trades. What I don't know, like that top is easy. That it's textbook. Literally, you could read my book from 13 years ago. You could take a training course and it shows you these things, right? That's as textbook as it gets. So maybe let's say easy isn't the word. Let's just say it's textbook. It's classic. It's what you should be doing every day. There's my target, by the way, based on nothing but fun technicals, right? What I said I don't know is this issue with parity. I don't know how the market's going to handle that because it's psychological. I don't know. I'm intellectual, not psychological. Everything on this trade is intellectual. It's a combination of hardcore fundamentals, hardcore technicals, and unbelievable patience and discipline. But this is what we teach and do in the swing trading group and the day trading group. And that one is just going. What I don't know, of course, is will the market freak out here because of parity? Well, that's not technical or fundamental. Okay. So weeks ago, I'm like, dude, this is going down to 98. Weeks ago. It's gone down to 98. That's what it says. And I agree with it fundamentally. Shoot, this can go to 80. But when you're looking at technical analysis, you always get a lower low followed by a lower high, followed by a lower low, followed by a lower high, followed by a lower low. So that's why I recommend you being a trend trader. Now, trend traders are, quantitative traders in the idea that they're following a technical system and they ignore fundamentals. So right, I like to have a combination where you understand price action and fundamentals. Okay. Okay. And so when you combine all of that, this is just just a swing trade. There's a slight position toward that, okay? But nonetheless, not extraordinary. The only thing extraordinary about the trade is we happen to be at parity. I think if we can get through parity, why not 90? Why not 80? When will Europe fix their European problems? When? That's what this chart is about. Why can't we go back to 85? What if Greek bond yields skyrocket? And then Spain and Italy and Portugal. What if something like that spirals out of control? And meanwhile, Germany is getting crushed by nat gas prices, radically short, rationing of natural gas through the winter. Like, that can't be good for economic activity and productivity. Okay? Okay? If we look at the daily chart and look at this as a trend trading system, okay, you're a turtle trader. Okay, there's a radical departure right around here 1 year ago. That's supposed to be a vertical line. Sorry. Okay. Consolidation over, breakout, moving average rollover. Most likely your best entry is this month. So let me try to figure out what that month was. See, M3. It's kind of like where we are now. So August. Cool. Exactly 1 year ago. Okay. You would have shorted and you'd still be short. Okay. Okay. How many central pivot points went up? None. Not one. Okay, let's take a look. M3, 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 M3. No, I can't see it. I think it's lower. I'm guessing it's here. All right. So which ones did not work? Probably not that one. Not that one. Well, wait. What's that? Did I misdo that? I think I drew something in there. This is M3. So I'm going to say that one did work. M3, yeah. Well, no, I'm going to take that one out. No. And yep. And front run for sure. And I'll probably say no. All right. And then, yeah, so we'll just leave it at that. So we have one. Let's do this in different colors. Sorry. 1, 2, 3, 4, 5. I'm wondering if I can take that one out. I'll take that one out. I'll say that didn't work. Which one was it? This one. I'll take that out. 5, 6, 7. Yeah. 8 standard, boring trades. And that's what I teach you to do in the swing trading group. Those are just nothing but standard swing trades, boring, nothing interesting about them, on the most heavily traded currency pair in the world by far. This pair represents 40% of all of Forex. So if you have a couple of hours a month, you can trade Forex. Richard says you can make 1,000. You should be making that like a month, not a year. Yeah. Anywho. Okay, cool. You guys got this. You got this. You don't have to be a day trader or an intraday trader to be successful in Forex. If you only have a few hours, even 1 hour a week to do weekly and monthly swing trades, you can be successful trading Forex. So if you say, Wayne, I can't do this. I have 3 kids, 2 cats, 1 job. I just can't find the time. I say that's a big pile of bullshit. I don't believe that for a second. Do you guys remember one of my last years at Harvard? I logged in every day from my dorm room, which was actually 3 doors down from Zuckerberg's room at Kirkland House, where he invented Facebook. So I was just like 3 doors down, like literally right around the corner. Right. Anyways, even with like 3 or 4 hours sleep, I woke up and went through the markets with everybody. I mean, dude. Okay? If you can let an old supermodel out hustle you, oh my God. I got kids. I got a wife. I got a job. I got stuff on top of that and stuff on top of the things that are on top of all that stuff. You could do it. There's nothing special about me. I'm a hard worker for sure. Okay? But that's all it is hard work. What I'm saying is you could squeeze an hour a week and find success. Okay? So let's go through a day trade. Okay, I have a day trade here. This is something we created last night in the day trading group. Okay? And we had talked about this one being sort of a out of position, sort of a riskier trade, but you're like, but it's a day trade. Okay? And then the next one would be if we were wrong on this, it just had to do with the level of aggression and that there would be some new requirement for the next trade. So I'm like, be prepared to be wrong Monday, but I expect Monday to be a big day and I expect dollar to strengthen. But be prepared to be wrong. Just don't put 5 more trades on because what we probably will get is a bigger up before the next down. What? So we don't know. So here was just a classic. That's a boring day trade. Oh my God, right? Boring. Okay. Here's a little front run. Here's one the day before. Here's another one. This one never hit. Look at this one. These are boring trades. So if you were a bear, Kiwi dollar, okay, and you're a day trader, this, by the way, you got to put everything into context. This big gray zone says bulls get out. So what do you think a bear would do with that knowledge? See, what a bull would do with that knowledge is get out. Hey, bulls, get out. You got to look at your charts and see the story. Every single person that bought here knows to get out here. If you don't know that, you don't know how to trade properly, and therein lies the problem. If you pay $88, that problem goes away. Like, dude, what are you waiting for? But put it in the context of a human story. Whoever bought here knows to take profit here. So what does that allow a bear to do? Well, there's a bearish day trade. There's a bearish day trade. There's a bearish day trade. Well, we didn't get that one. Here's a bearish day trade. How long does it take to set this trade up? So last night we were here. I went through most of the charts fairly quickly. And then we talked about other things because we're traders. We like to talk about industry stuff. And sometimes, I babble. But I get questions and we kind of have fun. We enjoy our camaraderie as well as plan some trades. But usually it's short and sweet. Look, I'm a bear. I want to sell here. What else is there? Well, if that fails, I'm going to look way up here. So I'll back off for a day or two and wait. So again, it doesn't take a lot of time. Okay. If we make a lower low, I'll predict the future for you now. If we get down there, I'm going to sell around here 2 days from now. Yeah, so if it falls, it'll come up and then I'll sell. Look, I just predict the future. Will it actually happen? How the hell will I know? But I know how I'll behave. It's the only thing I can control. Cool. So I'm going to leave you to it. This is a special day. Let me tell you something. I love trading. I love the markets. I spent a lot of time over the weekend doing research and thinking and preparing. And I hope you're as passionate about this as I am. I've asked you months ago to be ready, willing, and able this week. And I hope you're A game. I hope you got A game. I hope you didn't waste the entire summer. I hope you focused on preparation for now. Okay? The summer is the off season. Okay? This is day one of the season. And playoffs are going to hit by the end of the year. So I hope you're RWA, ready, willing, and able. And that doesn't mean just start buying dollar and gunning it. You got to be like A game on as far as technicals and fundamentals and putting them together and patience and discipline. All of these things. The real challenge is of thinking of this as a business and making decisions. It's not a video game. That's childish. So I wish you the best of luck creating value. And that is through sort of your intellectual involvement in what we call Forex, including your tactical entries and exits. They're super important. So again, I hope you're motivated to make this a great second half of the year. I think the middle part of the summer is just the middle. It's not even part of the season. Now it's time to lace your shoes up and play. Step on the court tall, prepared, strong, flexible, and mentally ready. And it'll be great. Don't expect the market to be great. Don't expect for an explosive opening. Think about it. It's the first game of the season. There's at least 150 games to go. So every single day is an opportunity to shine. Not only are you playing, but you're practicing playing the way you were taught. You're practicing playing like you're a professional trader. You're practicing thinking like a professional trader. You're practicing your patience and discipline. And I can tell you, if you practice discipline every day for 1,000 days in a row, you're by definition disciplined. Oh, I can never do that, Wayne. You're by definition not disciplined. So practice and practice and practice and practice. Every single day is a small day. Every single day should not matter. Listen to this. You might be misinterpreting what I'm saying, so listen to this. Every day should not matter to your track record, to your end results. When I say you should be ready, willing, and able, I'm not talking about making as much money as you possibly can. It's practicing to be as perfect as you can, not in your perfect trade entries, but planning and discipline and trading correctly, doing your best to master what you do. Part of that mastery is never putting yourself in a situation to lose a lot of money. And the only way to do that is you're trying to make a lot of money. How do you do that? Big lot sizes. Why would you have big lot sizes? Well, I want to get rich quick. Why? You don't have time? This is all about time. I'm asking you to do this for 1,000 days in a row. I got to get rich faster than that, Wayne. You will not make it. You don't have what it takes. If you think that way, you don't got it, son. Okay? This is all about time. This is all about consistency. This is all about preparation. Strength and flexibility. This is the long game. This is value creation, not getting rich. So that's what I mean. So if you jump on these trades and make a bunch of money today because you threw down big lot sizes, don't worry about it. You're going to give it all back. Don't worry about it. And you know it's true. So be strong, step tall onto that court, and play your game. It's offense and defense. And most of the winners will tell you it's mostly defense. But when you got a shot, take it. And because you've practiced, when the ball leaves your fingertips, you know it's going in. Because you've made that shot 1,000 times before, and you'll do it beautifully. They'll show the shot in slow motion because it's near perfection. It's beautiful. Angels will weep at the joy you bring society because what you do is beautiful. You're an artiste. Have a wonderful day. Cheers.